Welcome to the Greater Reno Tahoe Housing Market in Minutes for September 2019. My name is Mitch Argon. I'm the broker owner of Calneva Realty, and I'm going to take you through some key market information here over the next few minutes. First thing I want to focus on for you is the median price and how it's changed from 1 year ago. So you can see on the table here that we have August of 2019 compared to August of 2018, measured in thousands, and the change under the percent column. So for the most part, what you see is a pretty stable market. The Carson Valley was a -1%, and you can see that the Sparks market was +7%. So that's your range, typically low single digit, with the exception of Dayton, which for August of 2019 had a new median high of 350,000. That's ahead of where we were in August of 18 at 300,000, which is a 17% increase. I would not expect to see Dayton continue at 17% year-over-year growth. That's probably just an anomaly on a given month. All of these markets here will probably lie into the low single digits, maybe 3 to 5% as the average as we move forward based on a number of factors in the marketplace. In terms of homes sold, you can see that in August of 2019, it was mixed. We had some markets that were up, in particular Reno and Sparks. Then we had the other markets that were down compared to where we were in August 2018. Keep in mind that the homes sold volume in 2018 adjusted downward quite a bit from 2017, in particular in Reno and Sparks. So you're seeing those markets adjusting to the levels that we saw in 2018 as we move through 2019. And we are seeing a little bit of a delayed effect. In particular, you can see Dayton at 34% lower in terms of home sales, speaks to the Dayton market perhaps adjusting or changing a little bit behind the larger metropolitan cities or areas that we have here in the region. In terms of month supply inventory, which is how we measure whether we're in a buyer's market or a seller's market, we're fairly stable. You can see that almost all of these markets are between 2 and 3 months supply of inventory, with the exception of the Carson Valley, which is the highest at 3.3. We're still fairly low here. Under 4 months is considered to be a seller's market. And while we've grown this number dramatically over the last year, 18 months, it was down in the 1 range, so it's grown up quite a bit. We're still in the seller's market. However, as we move higher with month supply of inventory and we push closer to the 4 to 6 month range, this is what's driving or what's related to the price appreciation slowing into the low single digits. So keep an eye on that as we go forward. Quick market summary by the numbers. We'll continue to see modest growth in the median price. If we do see 1 month that's really high, really low, it's probably an anomaly on a month-by-month basis. Sales volume, again, comparable to 2018. We're fairly stable there. We have dropped off on the sales volume compared to 2017, but we're holding steady for the most part. As mentioned in the last slide, month supply of inventory, while growing, still keeps us in seller market territory, giving some advantage to sellers, although not as much as we had even 6 months ago, and certainly not where we were 12 or 18 months ago. Other factors which continue on a more broader or global scale, the stock market continues to be relatively volatile as a function of a variety of things. We've got elections coming up next year. I think we're already starting to see a little bit of anxiety around outcomes there. Trade wars and tariffs with China and other factors which we read about in the popular press. Interest rates, there's a lot in the national media about interest rates going lower. Maybe not, but there seems to be pressure to get them lower to be consistent with other countries. That, of course, would have an effect on housing as it affects the payment amount, which affects affordability for people and pricing. And the California metro markets continue to be slower than they were. They're correcting ahead of us, and that will affect our market as well. Things will take longer to sell in California. The appreciation rates won't be quite as high. So for people who are relocating from the major metro markets, in particular in California, northern or southern, that will affect our market as well as other feeder markets. That would include areas like Boise, Idaho, Las Vegas, Phoenix, Tucson, and others. So in closing here, just want to point out that we published this video off of numbers from the Greater Reno Tahoe Housing report, Greater Reno Tahoe Real Estate Report. These are charts that are just a sample of what's in the report. You can access the full report by clicking the link below, and you'll have tabular data and visual charts to show you how things have progressed over the last, in some cases, over the last 10, 15 years, and in some cases just on a month-by-month basis. If you have questions on any of these charts or any of this information, please reach out to me with a reply to an email if you receive that, or you can leave a comment down below here on YouTube. Please feel free to reach out to any of our agents here at County Lever Realty. We've got about 25 agents serving clients throughout the region from our 2 offices in Reno, Midtown, and the Carson Valley. Thank you for watching. Again, I'm Mitch Argon, County Lever Realty, and I'm signing off until next month.